Hello, 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 everybody. Welcome to my session um, with Take It to the Table with Juanita Orr. But this is our session that we call Let's Talk About Life. Life insurance, that is. Life insurance, that is. And this is a session where we spill all the tea about all the different policies, things that insurance agents will not share with you when they're trying to sell you a policy. So I'm sharing all the tea. I'm spilling the tea for all the different policies. So anything about any policy that you want to find out so you can make a good decision when you do decide to get a policy for you and your family. You'll know what type of policy well, first of all, what type of policy you need, what type of policy is available to you and your family, and what you can afford. What you can afford. That makes a big difference too when people try to select an insurance policy that will help them and their families. So before we get started, though, I want you guys to please share the live. Please, ma'am, please, sir, the least you can do is share the live. The information that I share with you all each and every time that I get on could be beneficial to somebody. It may not be beneficial to you at the time, but in the near future, it could be. It could be beneficial to somebody that you know right now that's probably going through bereavement. You never know. So please share the live. Please share the live. Thank y'all for getting on. I'm on my Facebook page, in my Take It to the Table with Juanita Orr Facebook page, plus my personal Facebook page, and my YouTube channel. And I'm also on TikTok. So when you guys see me going back and forth like this, that means that I'm talking to my other platform on my other devices. Okay. So thank y'all for joining me. Over on TikTok, if you have not subscribed yet, please subscribe to my page. Subscribe so you won't miss out on any of these lives. We are spilling the tea on insurance policies. We are spilling the tea. I also have a goal over on TikTok. Y'all see my goal there. And yeah, help me reach my goal over on TikTok. That's my goal throughout this entire session about life. We're talking about life insurance, that is. Okay. So thank y'all again for joining us. So today, y'all, we're actually discussing, well, what is the difference between senior life insurance policies, and final expense insurance policy. That's what we are talking about. We are talking about what is it? Is it a difference or is it the same thing? So that's what we are discussing today. I'm going to break it all down for you guys so you can truly understand. Because I know right now today, the final expense policies are very popular. The senior life insurance policies are very popular today. So I'm going to break it all down so you guys can fully understand what these policies are and would they be beneficial for you and your family. Okay, so let's start out by talking about the senior life insurance. It's basically a type of life insurance policy that's designed specifically for people that are 50 and above. That's why they call it senior life. Senior life, because it was designed for people that are 50 and above. Yeah, I'm gonna bring my camera here down just a little bit. Yeah, bear with me on Facebook here. I'm trying to get my camera right. But yeah, so thank you, Sister Jeanette, for sharing the live. Thank you so much. And y'all, like I said, when you get on, please share the live. Please share the live. That's the least you can do is share the live. But yeah, senior life insurance is basically a type of insurance that was yeah, I can't talk right now. Specifically designed for people that are 50 years of age and older. It was designed for people that are 50 years and older. Now, its main goal is to provide some type of financial support to your loved ones after the policy holder passes away. Now, often it helps cover the funeral expenses, the medical bills, or any kind of outstanding debt that you probably would have after you pass away. So you won't leave that burden back on your family. Now, there are a few common types of senior life insurance policies. Okay, there are a few different types. Now, one is the final expense insurance, which is known as burial insurance. Burial insurance, and I know y'all probably heard that term a couple of times. You know, people trying to sell burial insurance or people trying to sell final expense insurance. And so burial insurance and final expense insurance is basically the same thing. Senior life policy, a senior life insurance policy is basically the same thing as a final expense policy or a burial policy. They're basically the same exact thing. Like I told y'all earlier, with one of my prior lives, I explained to you the difference between the term and the whole life. And like I told y'all then, it's only two types of insurance. No matter what people try to tell you, there's only two types. You have your term and you have your cash value. Cash value and term, they may have so many different names for different policies, but there's only two types of insurance: term and cash value. So it's either going to be a term policy or it's going to be a cash value, which a lot of people call it whole life insurance. Whole life is just one of the cash values policies. That's basically what it is. So with this specific policy here, the senior life insurance policy and the final expense or burial insurance is basically a cash value policy. Now, with these cash value policies, we explained it to you in a previous Zoom live. I'm sorry, a previous live where I broke it down for you and explained how these policies work. And I'm going to get into that as we dig a little deeper into what I'm trying to explain to you now about the final expense insurance, which they call it burial insurance. Okay. Now, they also have with the senior life, like I said, it's three different types of senior life. You have your final expense, you have your guaranteed issue life insurance, and then you have what they call a simplified issue life insurance. But today we're just talking about final expense insurance, which is a senior life insurance policy, okay? But we're specifically going to address the final expense insurance policies because these are the policies that are well known today, and these are the more popular policies that the agents are out selling today. So let me break it down to you and explain to you what this is, how it works, and whether this is going to be a good investment for you and your family. Okay, y'all, thank y'all over on TikTok. Thank y'all so much for joining. I really appreciate it. And as you get on, please, man, please, sir, please don't forget to subscribe so you won't miss out on any of our lives, because we are live here talking about spilling the tea. That's what I call it, spilling the tea on all these different insurance policies. Now, let's talk about final expense, which is burial insurance. Now, these are small. When I say small whole life policies. They usually run from maybe 2,000, maybe up to 50,000. But a lot of times, people can't really afford to get that much of these type policies, if that makes sense, because they are expensive. They really are. They really are expensive. And I'm not going to sugarcoat it or anything for you, but I'm just being honest with you. These policies are really kind of expensive, because you got to realize the older you get, the more expensive insurance is. So if they're designed for people that are 50 years and older, guess what? Then yeah, you're going to be paying a whole lot more than what you would have paid for any other type policy, because they are designed for people that are older. Okay. Now, with final expense insurance, they basically are there to help you. They're basically there to help you with like funeral and burial or cremation, because a lot of people are going to cremation these days. I don't know why, because really, to be honest with you, a lot of these funeral homes, they know that people are cremating a lot of their loved ones lately because they think it's cheaper. Well, they know it's cheaper. It was cheaper, but the funeral homes now are getting a little whiff of that. So guess what they're doing? The cremation probably costs just as much as you having a funeral, getting a casket and putting your loved one in a casket these days. Because the funeral homes were getting a whiff that, okay, people are going to cremation because they trying to save money, but the funeral homes not making no money really. Well, they're making money, but they're not making as much money as they would have made if you had a full blown out casket funeral. Okay, so with the final expense burial insurance, it helps to cover the funeral, the burial, or the cremation costs for your loved one. It also helps with the medical bills. It helps with outstanding debt that your loved one probably leave behind. It also helps with legal probate fees. Yeah, legal or probate fees. And maybe one live, I'm going to talk with you guys about probate. Yeah, to break that down for you and explain what all of that means. But nevertheless, with this type of policy, the final expense or burial insurance policy, it helps for any what they call end of life expenses. End of life expenses. Now, some of the key features of this type of policy. It, like I said, it typically ranges from $2,000 to $50,000 if you can afford to pay for the $50,000 policy. Also, this is a whole life policy. I don't care how they sugarcoat it. I don't care what they try to add on, bells, whistles, all of that. It is basically a whole life policy. It's a whole life policy. Now, and we all know how these whole life policies work. I explained this to you in several different lives. whole life policies are what they call the cash value policies. And these are the policies that they're designed. They are designed like this to um to have you pay more money for the insurance, and you're paying 2 to 3 times more than what you would pay for a regular term policy, because they're designed to have you put money away in this so-called savings account, this cash value account. Now, with that cash value account, what people don't realize, and this is how the agents sell it to you: oh, you can have money where you can borrow anytime you want to. But what they're failing to tell you is that, first of all, insurance companies are not giving out any free money. So in order to have that money over there so you can borrow that money, guess who got to put that money there? You put that money there. So if I put the money there, if I'm putting that money there in this cash value account, if I'm paying extra and I'm putting that money there, why is it that I have to borrow my own money when I need it? And y'all, this is not all me just talking. If you have a whole life policy, I challenge you right now to go to your whole life policy, and you look in the front of it and you find out where you can go to find out about the page that it states for you to if you want to borrow the money, it'll show you in there what the interest rate is always high for this money that you're going to take out of this so-called savings account, cash value account. The interest rate for you paying that money back is always up there. And you, like I said, if you don't believe me, pull your policy and you look at it for yourself. There is a fee for you taking that money out. And if you don't put that money back in, guess what? Now your family is going to be penalized if something was to happen to you. So if you die and you took out $5,000 and you took it out 5 years ago, but you never paid that money back, then when you die, your family will be penalized for it. So now instead of your family, if let's say you had a $20,000 policy, so instead of your family getting $20,000, they're only going to get what's left after they take out the $5,000 that you took out, which was your money. They're going to take that, and plus you took it out 5 years ago. So all that interest has built up on that $5,000. So not only are they taking $5,000, they're going to take the interest because you never paid that money back. So that interest for 5 years, they're going to take that too, and whatever is left out of that $20,000 death benefit, then they pay your family that. They don't tell you that, but I'm telling you that. So you will know how this works. And I'm pretty sure a lot of you probably already know this because you probably had these policies. And when it was time to pay out, you thought because your loved one took out whatever amount it was, you thought you was getting that. But then you got less than that because you didn't know that they borrowed from their policy and didn't pay it back. And now instead of you getting whatever the death benefit was, you're only going to get whatever is left over after the insurance company take away the money that they took out, which was their own money. Plus they done build up interest on it because the insurance company treated the money like it was their money, and they charged them a loan fee, entrance fee. And so now they're going to get all of that before they give you the death benefit. That's how whole life policies work. That's how cash value policies work. That's why when you hear people say, oh, these policies are good, you know, you get money and it's going to build up and you get to borrow your money anytime you want to. I don't want to have to borrow my own money. I don't want to give you my money, and then when I need my money, you're going to tell me it's a loan and I got to pay you back my money. And then not just that, you're going to charge me interest or my money. It makes no sense. It makes no sense. Are y'all following me? Are y'all following me this far? Please put something in the comment section. Let me know if you're following me. Let me know if you're following me. Hello to everybody that's joining me live now. Thank y'all. Thank y'all for joining me. Thank you, y'all. I appreciate it. MD Hazelful. I hope I'm pronouncing it right, and I know I'm probably not. But thank y'all for getting on. I really appreciate it. Angie, thank you. Angela, thank you for jumping on. Mathal, thank you for jumping on. I appreciate it. Now over on TikTok, are y'all following me? Did y'all catch that? Do y'all understand what I'm trying to explain to you guys? Because I want y'all to get this. I want you to get this. And I want you to get this because I want you to be able to get the best policies that will be suitable for you and your family. Because you don't want to wait until you need your insurance to find out that you don't have what you thought you had, because then it's too late. So I want y'all to get this. I want you to really, really get this. So that's how whole life policies work. Now, with these senior life and final expense burial insurance, which is the same thing, just different names, but it's the same exact thing. Like I said, these are whole life policies. These are whole life policies. Yes, they do have a fixed premium on them where you're paying monthly the same thing. But guess what? They're also charging you extra to put money, well, for these policies, so you can so they can put money aside in that cash value account. These type policies, usually they are no medical exam required, just a basic health questionnaire that your agent probably would ask you in order for you to fill out the application for these type policies. So, and it's also sometimes pretty easy for you to qualify for these different type policies. Well, for the senior life or the burial insurance or final expense insurance, it's pretty much usually no medical exam required for you to get these type policies. Now, who is it for? Like I told y'all earlier, it is basically for seniors or those with health issues. So you probably would find people who probably have a hard time qualifying for a regular policy, like a regular term policy or even a regular whole life policy. You will find people who have a lot of medical issues going on. They kind of flock to this type of policy because they really can't get approved. I'll put it like that. They can't get approved for a regular term policy or get approved for a regular whole life policy. So a lot of times they flock to these type policies, like final expense policies or burial insurance policies, because they want to make sure that they have something in place if something was to happen. So and these policies are, like for the one, like I said, for the ones that can't qualify, but you got to realize that they don't pay you out a whole lot. You don't get a whole lot. So if you have a family, let's say you got a family of four, say you got a spouse and you have at this age, at age 50 and older, you probably would just have a spouse. But let's just say that an agent tried to sell you this policy and you're under the age of 50 and you have a spouse and you have a whole family, you have kids. You might want to check into that because it may not be the best policy for you, because it's only going to allow you to get but a certain amount, and you're going to pay a whole lot of money for that certain amount. And so if you check around and try to find out how much you can pay for different, like say, if check with somebody who sells terms, somebody who sells whole life, you probably would find that those policies will be a whole lot more inexpensive than you getting one of these senior life policies or final expense policies or burial insurance policies. If you are young, I suggest that you don't invest your money in these type policies. That's just my opinion. Because you could get so much more insurance if you just get a regular policy instead of investing in one of these, because they're designed for people that are 50 years and older. So of course the cost is going to be up there. So if you are young, I would suggest you check into getting a regular whole life or a regular term life policy. Term life, preferably, because term life is always more inexpensive than whole life. Term life is always, always, always cheaper. That's what I'm losing. Cheaper than whole life. Now, these are the cons. These are the things, the negatives about this type policies. I'm a spill the tea. These are the negatives about these type policies. For one, smaller payout than any traditional life insurance policy, whether it's whole life or term, but the payouts are smaller. That's what I was trying to explain to you guys. Higher cost per dollar of the coverage compared to larger policies. So the cost per dollar for the coverage is higher than your regular term policy or your regular whole life. Definitely term. Now, some policies have you waiting for a period of 2 years. It's usually a 2-year waiting period before the full benefit kicks in. So if you pass away within the 2 years of you taking this policy out, they might not pay in full. They might not pay in full because these policies are designed, a lot of them are designed with that 2-year waiting period before the full benefit kicks in. So if you take out a $20,000 policy and you die within 2 years after you take it out, then you would probably only get the money that you have invested, like whatever payments that you made for those couple of months or whatever that you had the policy, whatever that payment was, they'll give you that back, and then they'll pay you a percentage of whatever that money is. But the full benefit normally does not kick in until you have these policies for at least 2 years. For at least 2 years before your full benefit kicks in. Now, there are some that they tell you that the full benefit kicks in like as soon as you get approved. But you have to know this. You have to have the agent show you this in your policy where it shows where you don't have to have the policy for 2 years before the full benefit kicks in. Let them show you that in writing. Don't take their word for it. If it's true, then they can show you in the policy where it says that if you die within the 2 years of you having it, they're going to pay you full benefit, or your policy benefit kicks in immediately after you get approved. Let them show you that in writing in your policy. Because if they can't show you that in the policy in writing, it's not true. Don't take their word for it. It's not true. Because these policies, this is how they're designed. They're designed not to kick in the full benefit of whatever death coverage you're taking out. It's not designed for it to kick in until after you've had these policies for 2 years. So if an agent try to tell you anything different, you ask them to show you that in your policy. Show you that in writing where it says that. You don't want to take their word for it, because I promise you, once something happens, that's not the time to find out that you don't have what you thought you had. So I'm spilling the tea right now, and I'm telling you guys, when an agent approach you with these type policy, final expense, senior life insurance, barrier insurance, you ask them, okay, if I take out a $20,000 policy, how long would it take for my benefit to fully kick in? If they tell you that, oh, as soon as you take the policy out and you get approved, your full benefit kicks in. That $20,000. If something was to happen to you or your loved one, you get that $20,000. Show me that. Show me in the policy where it says that. I'm just spilling tea. That's all I'm doing. I'm just spilling the tea. And I'm not really spilling tea. I'm just telling you guys stuff that you need to know for your own benefit. Because the more we know, when we know better, we do better. I'll put it like that. And when you're more educated on an issue, you will know how to go about and how to approach it. You know, how to be beneficial to you. Like I said, you don't want to wait until something happens to find out that you don't have what you thought you had. That is too late. That is not the time to try to be going back and forth with the agent. Well, you told me. No, that is not the time, because at that time, that's when you need it. You need it, and you don't want to have to be fighting back and forth with your agent. Now, thank y'all, TikTok. Now, there are a few, and I already talked about one of them, why they probably won't pay out. For one, they won't pay out if your waiting period, you have a 2-year waiting period, what I just explained to you. So if you have a 2-year waiting period, that would be one of the reasons why the insurance company won't pay you, because you have a 2-year waiting period. So if you die within that 2-year waiting period, then, like I said, they're just going to give you the money that they refund you the premiums that you paid. And sometimes they pay you the interest on that money that you paid in, but you don't get paid the full death benefit. Now, if the policy lapses for non-payment, of course, you're not going to get paid. You're not going to get paid if the policy lapses. No, you're not going to get paid if the policy lapses. Now, unless you reinstated the policy, but then also, let's say you had the policy 2 years. Now you passed that period where if something was to happen, they will pay your family with no questions asked. But if you let the policy lapse, now I've had this happen to a few of my clients. Now, not just with this type of policy, because we don't sell these policies, but with any insurance policy, if you let the policy lapse, then that 2-year period, it starts all over again, even if you reinstate the policy. Because no matter what insurance company you go with, it's always that 2-year period. If something was to happen to you within that 2 years, they have to do an investigation. They have to do an investigation to make sure you didn't lie about your health, make sure that you didn't commit suicide. And yeah, but if something happens within that 2-year period, then of course they're going to have to do an investigation. But let's say you reinstate the policy. You had it for 2 years, but it lapsed, and you reinstated. Guess what? that grace period starts all over again. That 2 years, it starts all over again. So every time you reinstate that policy after it lapsed, that 2 year, it doesn't matter if you had the policy say 5 years, 6 years. Every time you let that policy lapse, that 2 year period starts all over again. It starts all over again. Okay. Now, the other reason why they won't pay you if something was to happen to you with with this type policy, another reason why they won't pay you if you was misrepresented, or fraud, a fraud. Say you gave false information. That's what misrepresentation means. You lied. You basically gave them false information on the application. So you lied about your health. You lied about your age. You you just lied. And they can definitely deny the claim. They can deny the claim if they find out that you've lied. And I promise you, I tell my clients all the time, it's no need to lie about your health when it comes to filling out these applications. Because if something was to happen to you within that first 2 years, then guess what they're going to do? They're going to do an investigation, and they're going to do an intense investigation. I have seen them pull medical records back 10 years. So they're going to do an intense investigation. So if you lie about your health, let's say you die from a heart attack, but then you never share with them that you was taking high blood pressure medicine. They're going to find this information out anyway. But if they don't find it out and you die within the 2 year period, y'all, they're going to do an intense investigation. So it's no need to lie about your health. Be honest, be truthful. Let them dig before they approve you. Let them dig all they want before they approve you. Because if they go in and they dig, but they don't find nothing, then guess what? Even if something happens to you within that 2 year period, it's going to be hard for them to say, oh, we're not going to pay them. But they dig. They had already sent for medical records. They dig. They just didn't find anything. So that's going to be on them. That's on them because they dig. So that's why I'm saying, be honest, be honest, be honest. When it comes down to your health, be honest with the agent. Tell them, let them dig. Now it's up to them. If they find something, let them find it beforehand. So if something was to happen, at least they dig. And if they didn't find it when they dig, then that's on the insurance company. You did what you had to do. You was honest, and that's on them. Okay, so just be honest when you fill out the application. Just be honest about your health, because I've seen them. I've had policies that they claims that they just flat out just deny because the person wasn't honest. The person was truly not honest about their health. And so they died within that 2 year period. And after they started digging and finding out medical stuff, they was like, we would have never insured this person because of this. That we would have never. And so they deny the claim. And I mean, what can I do? I mean, the person wasn't honest. They just wasn't honest. So just be honest when you fill out your when you answer your health questions on your insurance applications. Now, and y'all, I'm gonna have to hurry up because I'm gonna have to get off here. But listen, what's another reason? Another reason why they won't pay out if the beneficiary is named or the beneficiary is deceased. I mean, if no beneficiary is named, or if the beneficiary is deceased, then of course they can't pay out if the person is no longer there. Now that's another thing too, you guys. Now, if you have a beneficiary on your policy, don't forget if the person dies, that's why you got to go back in practically every year and revisit with your agent to find out, to make sure that your beneficiary is still living. Because if the beneficiary is not living and then you die, guess what's going to happen? They're not, they who they're going to pay? The person is dead. They died before you died, but you just never changed the information on it. So now, guess what? It's going to be held up in their estate. It got to go through all kind of court and all kind of craziness. So now the money is tied up into it's going to go. It's going to pay out to the estate. Basically, it's going to pay out to your estate. So just make sure that you revisit your policy, just to make sure that the person or the people that you have on there as beneficiaries, they are still living and well. So if something was to happen to you, you don't have to they don't have to hold your money or hold it up or pay it out to the estate. Okay? They don't have to pay it out to the estate. Now, like I shared with y'all, this type of policy, like I said, is it's a whole life policy, and it's basically for people that are 50 years and older. 50 years and older. Now, let's say you take out a policy at the age of 35. And this is how whole life works. You take it out at age 35. You got $100,000 death benefit, and you agreed to pay, say, $2,000 per year, and your premiums for 20 years. Now you make all your payments from age 35 to 55. Okay. At age 55, your policy, y'all, wait a minute, hold up. I'm getting beside myself because I'm getting y'all confused, like I'm getting confused here. But these type policies, like I said, they are whole life policy. Now with whole life, I just explained to you guys how whole life works. They make you put the extra money into the savings account, which you don't want to have to do that, because once you put that money there, they're going to make you borrow the money, and the money is your own money. So why would you have to borrow your own money? And not just that, they're going to make you pay it back with interest on your own money. If you don't pay it back with interest, when you die, then they're going to penalize your family. Your family is going to get penalized for it. So that's basically how these policies work. Now, that's final expense, senior life, and burial insurance, all bottled up into one, because they are basically the same thing. Senior life have several different types of policies that fall under their umbrella, and final expense is one of them, and final expense is also known as burial insurance. So that's how these policies work. So I want y'all to, if you have one of these policies, just go and sit down and make sure you have what you think you have. And if you're not at least 50 years or older, go check and see how much it would cost to get you a term policy. Because you're not 50 years and older. These policies are designed for people that are 50 years and older. So of course, the cost per coverage is going to be more expensive, because they got them designed just for people that are older. If you are younger than 50, then you need to be finding out how you can invest in some other type of policy where you can get more coverage paying less money. But that's all I have, y'all. I hope and pray that whatever I share with you today, I hope that it's going to benefit somebody, if not everybody, at least one person. At least I know I did my job today. So if you are not subscribed yet on my YouTube channel or on my TikTok channel, page, please go ahead and subscribe so you won't miss out on our next live, which we'll be having on Thursday. Now, on Thursday, I'm not sure what we're going to be talking about on Thursday, but it's going to be something where I'm going to be spilling the tea. I'm going to be spilling the tea. Okay. So I'm trying to educate the public so you can make some good decisions when it comes down to, finding the right policies for you and your family. Now, I'd like to give a shout out to my sponsors, Lavish Cocktails by Toya, which is a mobile bartending service. She does wedding receptions, private events, birthday parties, date nights, and much more. And you can reach her at 864-523-2065. She even do the games, some of the games at the Clemson home games. So you probably will see Lavish Cocktails by Toya at some of the Clemson games. Sometimes she be bartending out there for them. But we also have another sponsor, and that is for those that are looking for a DJ. We have DJ Q on the ones and twos. He caters to young and old. He has a state-of-art equipment, and he can turn any event or party into a party of your lifetime. Now, he has DJ for several different schools, for school proms, school dances, school sporting events. He's DJ for weddings, parties, receptions, church events, corporate events, private events, brunch parties, community events. You name it, he can do it. So you can book him by going to his Facebook page, and you can reach him at DJQ at Original, ORRIGINAL Sounds Entertainment. That's DJQ at Original Sounds Entertainment, y'all. And also with me, for those of you that are interested in getting some quotes, if you have one of these senior life policies or these final expense policies or burial insurance policies, and you want to see if the policy you have is the best policy for you, or you want to check to make sure that you can shop around and get something that may be a little more affordable, then I can give you a quote. I can definitely send you a free quote, but just hit me up in my inbox and I'll be more than happy to sit down with you, or just to send you a free quote so you can kind of, take in and kind of gauge what you have to the quote that I'll send to you, and you can see which one will work best for you and your family. Okay. We're also always looking for people to come join me in business, y'all. I'm always recruiting because I feel like the information that I share with my family, my friends, my coworkers, my church family, with y'all, it's good information. Everybody needs to know this information. Everybody needs to know this information. And the more you're educated about what you're trying to do, the better decisions you can make in doing it. So we're always recruiting, y'all. When I tell you that this was the best thing that I could have ever done, I've been doing this now for 15 years. And I love it. And I won't trade it for the world. And the good thing about doing this type of business, you do it on your own scheduled time. So you can, if you have a job, keep a job. You can keep your job. You come into this working your own schedule. However many hours you want to put forth in doing this per day, per week, is totally up to you. But I can show you how you can make some extra income, or you can change your career. You can change your career. And not only do we do life insurance with this, y'all, I help people with investing in mutual funds, investing in annuities, investing in, or helping them with the 401k retirement plans, turning them into pensions. So it's not just the life insurance that I do doing this business. I just choose to do the life insurance part of it more because we need it. Our community needs it. I'm tired of seeing the GoFundMe's pop up, where people are begging and asking people to help them pay for one of their loved ones' funeral expenses. I don't think that responsibility should be put on people that are not related to, or people that are not, immediate family of the loved one. That's just my opinion. But yeah, so we're always recruiting, and I will teach you everything I know, everything I know. So you can get good at doing this too. And you can go out and you can start, you know, at least sharing information with the community, helping people make right decisions, helping them to make sure that they're properly protected if something was to happen, helping them build generational wealth. Because at this point, we all need to start building some generational wealth. The way the economy is going, you know, the way jobs are going now, they're not even considerate about people that are federal workers now. You know, those are the jobs that we thought that would never go anywhere. You know, if you was a federal or a state employee, you always thought, oh yeah, I ain't worried about that. They ain't. No, that's not the case these days. So come, let me show you how you can make some extra income and do this. And not just do this just to make extra income, but you'll also be helping others. Okay. Y'all, that's all I have. I gotta get off here because I got an appointment that I gotta get to. But y'all, if you're not subscribed yet on TikTok, please go ahead and do that so you won't miss out on my live. On Thursday, we have another live at 5 where I'll be coming back on and I'm sharing some information with you guys, tips and information that the insurance agents won't share with you about certain insurance policies. Thank y'all so much, and y'all have a good one, and I will talk with y'all on Thursday live at 5. Live at 5.